Hi, welcome. It's Mary Ellen McGonigal, Senior Managing Director of Stocks here at Simpler Trading with your weekly Edge show for Saturday, September 25th. Let's take a look at what we're going to be covering. First up, we're going to take a look at the current markets. A little bit sloppy last week. You'll want to know how we ended the week. So, of course, this show is always with an eye toward helping prepare you for next week and beyond. Also, a lot of news came out, and there were some subsequent underlying dynamics that took place, shifting sector rotation. So lots of interesting items that we're going to be covering today. And then last up, question of the week. And it's going to have us drilling down into the index that did outperform this week. And it's also going to highlight some of those shifts that we saw take place this week. There were some economic news that drove the markets. First up, the markets were very rattled earlier in the week, and I'm sure many of you read about China's largest real estate firm, Evergrande, potentially defaulting on their debt. And there were fears that there would be a contagious sell-off that would riffle through the broader markets. As the week progressed, of course, those fears did recede, and on Wednesday, the Federal Reserve Fed Chair Powell came out and talked about the fact that the Federal Reserve will most likely taper their bond buying, potentially by year end, but certainly into next year. Also, we did get news that weekly jobless claims came in a little bit higher than anticipated. A lot of that due to California bookkeeping issues, so no real news there. However, we did see overall cyclical or those recovery areas outperform. So we're going to talk about that and also uncover the underlying reasons. Why is there further upside in these recovery areas? And of course, next week we are going to get some reports. Durable goods is going to be coming out, consumer related information, core inflation. So lots to be on the lookout for next week that may impact the broader markets. So from here, let's take a look at the S&P 500, and we are looking at a daily price chart. And let's take a look. This was that beginning of the week fear that pushed the markets well below this 50-day simple moving average. Very ominous. Certainly from my MEM Edge report, we did assume a cautious stance. And from there, the broader markets were able to claw their way back up above that 50-day simple moving average again as those China-related fears receded. But there were also other news that was driving the markets as well. So from here, the markets are now back into an uptrend with the RSI. That's your relative strength momentum indicator up here in positive territory. And then the stochastics also up here in positive territory as well. So from here, we want to take a look at what may be taking place behind the scenes. So here are the 11 S&P 500 sectors, a 2-month daily price chart view. I've gone ahead and added that RSI. We're sorting it in descending order because we want to see where that relative strength is. This is where you want to be putting your money to work in those areas that are showing relative outperformance. But of course, you want to know that that outperformance could in fact take place longer term. So first up here is energy, XLE. We can see a nice decisive downtrend reversal this week. Nice high volume characteristics, your RSI up here now in positive territory, as well as the MACD. And as we move on, I'll share with you some of the occurrences taking place that are driving energy higher. And a lot of it has to do with production levels and then increased oil demand. So that looks very constructive. Next up, consumer discretionary stocks. Now, they didn't really outperform by much, but they did have a nice downtrend reversal breaking above each of these moving averages. All about news that Biden will be lifting that travel ban. People can now enter the U.S. potentially as soon as November, as long as they provide vaccination proof. And this, in turn, did push a number of hotel, travel booking type firms, leisure-related, up higher this week, as well as a nice move in Tesla, helping this industry group perform well. Next up, financials, XLF, and we can see that this particular industry or sector had a nice downtrend reversal as well, back in positive territory. Has everything to do with rising interest rates as the Fed tapers their bond buying. That is going to push interest rates higher, which in turn is really constructive for financials. We'll drill down individually from there as we move forward. And then other areas that we can take a quick look at here. Technology did get hit a little bit harder than the markets, but it too is reversing its downtrend. A nice break above this pink 21-day would be even more constructive for the sector. But as we move on, I will share with you two major underlying industry groups that are back in bullish positions. So let's not waste a minute, move on and take a look at some of those sub-industry groupings. Certainly names or areas that I like to cover that really are bellwether. They provide terrific insight into the markets and where that strength is. Of course, that's what we're on the lookout for. So first up here is the price of crude oil. This is Brent, the per barrel price now up in $77 range. And I know that when I first got MEM Edge subscribers into energy was back here in November, and at that time energy was at $44 per barrel. That $50 price level is the break-even point, and so more recently having a $77 price point for oil is quite constructive. It really improves the profit margin outlook for these energy companies, and of course the producers are those that will benefit the most. Another impact that I mentioned to you as far as financials is that increase in interest rates. This is a look at the yield on the 10-year Treasury. Nice big move last week. We're now up at 1.46. Again, very constructive for financials, but let's take a look at which sub-industry grouping within financials, and that is going to be banks. This is KRE, Regional Banking ETF. Nice decisive downtrend reversal, and we can see nice outside upward momentum indicators in these bank stocks as well. I mentioned too that I would talk about two sub-industry groupings in tech that are very relevant and have had nice moves back into an uptrend. This is IGV, the American Tech Software ETF, pulling back. It really only dipped just a bit below this 50-day. So software stocks held in remarkably well last week, and then as stated, resumed their uptrend. And we're going to share with you one of the reasons that software stocks are back in play as we move forward. And then another tech grouping here is semiconductors, a little bit more volatile, but you can see that it did regain its presence above these shorter term simple moving averages, and that's positive for an industry group as well as any stocks that you may have on your watch list or otherwise. So what we have here is a view of the 30 underlying stocks within the Dow Jones Industrial Index. I've gone ahead and sorted it by that relative strength. Again, we want to see where that strength is because we are in anticipation of it continuing to outperform. So let's take a look. First up here is Salesforce, one of the larger software stocks, and very impactful news. The company had their investor day last week. Management came out and guided earnings and sales growth estimates higher well into next year, and Wall Street absolutely loved this. We can see the stock had this nice gap up that caused a base breakout here at 275. Big volume characteristics that are continuing to drive the stock higher, and from there a number of other software stocks also experienced nice gains as the outlook for them could also be potentially heightened as the economy continues to expand. Let's take a look at the next company up here in the Dow on that relative strength basis, and this is American Express, AXP. This downtrend reversal that we're seeing here was all about a Wall Street major firm, that removed their bearish stance on the company, and that was certainly good news. Investors embraced that. The stock broke back above its 50-day simple moving average. Take a look. Your RSI up here above 50, trending higher. Your moving average convergence divergence now up here in positive territory. Next up is a potential $180 base breakout, which could easily propel American Express higher. Next up, McDonald's, a little bit dicier as a chart, but we can see it did experience a base breakout on decent volume. The company came out and announced a share buyback program that's been embraced, and also a dividend increase. So McDonald's up there in an uptrend. Then from here, let's take a look at one of the larger bank stocks. I mentioned to you that bank stocks are now in an uptrend. This is JP Morgan Chase. We can see, similar to the industry group, that the stock has reversed this recent downtrend, broken back above each of its moving averages on very good volume, and the stock at this juncture could easily, it's a hair away from a 1-month base breakout. Your outside momentum indicators are positive. Certainly you can drill down into banking, and there are other potential candidates as well. And then let's take a look at Chevron. I mentioned to you energy stocks. This is a major oil producer, and it has reversed this very lengthy downtrend. Again, same dynamics, breaking back above these simple moving averages. Your RSI and your MACD now both in positive territory. And then one last name that we can take a quick look at here is Visa, of course, a payment processing firm, one of the largest globally, really, and we can see that it is also in the throes. Not quite yet has it reversed its downtrend. A break back above this 50-day simple moving average would be quite constructive. We have this nice black line up through the red MACD crossover. If the MACD could get up above 0, that would be more constructive. Visa, their credit card profit margins do increase as travelers use the card abroad. That's one reason. They're also heavily involved in cryptocurrency as well as fintech, so keeping this one on my watch list. I'm going to leave it at that. Everyone have a wonderful weekend, and I will see you here next Saturday. Hey, Mary Ellen here with Simpler Trading. Thanks for watching the video. If you liked what you saw, go ahead and hit that like button and leave comments below. And if you'd like to be notified to future videos, you can hit that bell icon and subscribe. Don't leave without subscribing to my MEM Edge bi-weekly report. I do have a special trial offer. And for those who'd like to learn about trading live with us, you can go ahead to simplertrading.com to learn more.